Hi everyone. Welcome to this webinar. This is Mark from FX Instructor. And hi Jeff. Where should we start? We have had a very surprising day. Why do I call it a surprising day? Because basically the last few days we've been looking for risk averse markets. We've been looking for a stronger dollar, and I started out thinking that this would be another one of those days. I started out thinking, well, I should be looking for places where I could take the short side of the euro, the GU, the Aussie, thinking that it's going to be another strong dollar day. But what has happened? It started in Asia. In the Asian session, instead of getting a bear market, especially when the Australian GDP numbers came out very poorly, we saw a limited sell-off from Australia instead. We saw the Chinese PMI data, and that Chinese PMI came out better than expected. When Chinese PMI came out better than expected, what did we get? We had Asian markets stabilizing and eventually firming up towards the close. Now, when European equity markets opened after days of sell-off, what happened? We saw a firm open from European equities, and because of this, we now have this bounce that we see in our Euro charts, in our GU charts, in our Aussie charts. We practically have the greenback retreating today. So the question for us is the contagion story over? Are we now saying that our euro is going to bounce off from this level? Or are we still thinking this is more of a technical bounce? We can expect euro to weaken again. Let's put it this way. If you look at the bonds, people are starting to compare even German yields with that of the UK. Okay, so contagion is continuing. In fact, it's really hitting core Eurozone countries. It's no longer about the pigs anymore. Even countries like Italy, like Belgium, they're now paying higher or the yield rates for their bonds are now higher. Okay? What does that imply for us? It implies that there could be funding problems going forward for the Eurozone. The money that the EFSB has right now, that emergency facility that was established last April, May in the Eurozone, that's not enough to accommodate the needs of Spain. More to the point, that's not enough to accommodate the needs of Belgium, of Italy, if these countries find it too expensive to tap the private market. All right. What else? Well, the only solution that really is applicable to the situation in Europe right now is what the Americans have been doing. And what have they been doing? They've been printing money. So what am I suggesting, guys? I'm suggesting that unless the private sector voluntarily stops raising premiums on European debt, the only way forward for the euro would be to continue losing ground. Okay? If that's the case, then let's take a look at our euro and see if we are at the point where traders might be tempted to think about the possibility of rejoining the short side of the market. Okay? So let me take a look at my euro profile. And what do we have from our charts? If look at this from the big picture, we have had a we have had about 7 days of weakness as far as the euro is concerned. If you look at our indicators, we are still in oversold territory. We still have a bearish MACD. As I said, I'm actually surprised with the bounce. I was expecting earlier during the Asian session, when I woke up, I was expecting that I would be getting a test of 29.90 right now. But we have this pullback. Alright, so let's work with this pullback. Just how much of a bounce do we have in the charts? Where are we with respect to the sell-off since last week? Are we at a critical point? Can we say that, hey, this better start dropping again? If you look at our daily picture, we haven't even seen a 23.6 fib retracement of the sell-off from last week. Although we do have some resistances around the 31.18 area. Thus far, that has proven a good intraday resistance level. So, mixed, well, let's put it this way. You have a white candle, you have bearish indicators. We find ourselves just under resistances. We are in a mixed situation. I'd like to find out from my lower time frames, hey, is it time for me to think about shorting the market again? What do we have from the lower time frames? Let's see. We look at our 4-hour charts, and for now, we find ourselves with a confluence of buying. We have resistances at your 21 EMA, 31.34. We have that daily support from before, your 31.18, acting as a resistance for us right now. Candlestick wise, we actually have some very bullish looking 4-hour candles. Okay. In candlesticks, when you see that the body of your candles are getting wider, it's a suggestion that momentum is building. So there is still risk of a further upside. There's still risk that we get to test the 31.50, 31.59 region. Okay, 31.50 is a congestion high, 31.59, your 23.6 fib level. Okay, so 4-hour picture tells me you still have some upside. How about the hourly time frame? In hourly charts, we have a bullish MACD. We have stochastics crawling around overbought territory. Now, is that okay? Is that normal? Having your stochastics crawling around overbought territory is normal when you're developing a trend. Let's not call this a trend just yet. Let's just call it a pullback. Your hourly stochastics can crawl around above 80 as much as it wants. But as long as we are below the 31.50 area, we're just under 31.50. We only have a 43 pip upside from here. It doesn't make sense for me to try taking action. To me, I'd rather see if our bullish hourly charts, our bullish bias on the 4-hour picture, I'd rather see if they could really push prices towards the 31.50 price point. When we get to 31.50, that is the time that I have to ask myself. Average daily range for EUR USD is only 157 pips. Lows for the day is at 29.71. At 31.50, that would mean that I've already had a 180 pip move in the market. Add to that an already overbought oscillator and a resistance, and that becomes a tempting situation for me. That becomes a potential price area for me to think about getting some rejection. Again, folks, right now we are bouncing in our euro, we are bouncing in our cable, we're bouncing in our Aussie, primarily because of the equity market bounce, a technical rebound. We have not heard of anything new that would lead us to believe that the solution to the bond vigilantes, the solution to the contagion in Europe is at hand. No such solution is available just yet. And in fact, the only solutions that I'm aware of from this kind of in this kind of conditions, according to economic textbook, is you have a weaker currency. Okay, so either you print more money to weaken the currency, or you really allow the country to restructure, which means, in this case, since they're part of the Eurozone, a restructuring by any country damages the credit rating of the whole Eurozone. Some guys are saying, okay, another solution would be, why don't the Eurozone issue bonds as a group to make sure that we can get lower yields, lower yields. But the thing is, if the whole of Eurozone issues bonds as a group, that means that the more indebted nations' credit rating would drag down the credit rating of the more balanced economies, like Germany, like France. And we've heard from German officials earlier, and they're not even willing to expand the current EFSB. So again, we are far from seeing the end of the contagion issue in the Eurozone. Let's take advantage of the better pricing that we're getting and try to see if we can get rejections from 3150. We can use tight stops above that 3150, 3159 area. Ideal stop losses for me would have to be around or just above your 3206, 3208 region. But if you think that that's too far, you can think about putting that stop just above your 3180 price point. Okay, so for now, we can do nothing in euro. We'll just have to wait for prices to get to that 3150 area, and hopefully from there get some rejection. Now let me take a look at GU. Do I think that after the pullback, EU will fall to 1.6? Well, let me get back to that euro. Would you be surprised if I say it's possible that we can be talking about 2400? Yeah, the answer for me, my answer to that question would be yes. Getting to at least the 2650 area would not be out of the question. Again, the only solution that I can see here where the Eurozone gets to remain strong is for bond investors to volunteer to lend their money, for private investors to lend their money to Eurozone countries at a lower rate of interest. And right now, I don't know of anyone who's going to do that. Okay, right now, people are asking for a very high premium, a very high yield, because of the risk that they take, because of the risk that some of these countries may actually have to ask for a restructuring. Okay, because of the risk that they may not actually be paid. You know, if only Andre, head and shoulder in the daily charts. Are you talking euro? Oh, I think I see what you mean. Let me get a cleaner chart. Well, if more like if you're thinking this weekly level head and shoulder, I really don't know. if you're going to mark this as your, okay, say this is your left shoulder. I think that what we're going to get here is a very limited upside. I don't even think that that will last for beyond today. I'm actually thinking by tomorrow we're going to have another push on the sell side. So I'm not really comfortable if to calling it a head and shoulder. It looks a little too weird. One thing that I do with patterns is it has to be very clear. It has to be something visible to everyone for me to be confident about the pattern that I'm looking at myself. A rule that I always tell myself is technical analysis is a self-fulfilling prophecy. Okay? The more people come up with the same conclusion, the more likely that the markets will move in that direction. The assumption is more people means more money going into that particular trade. So, not confident about the head and shoulder there. But let me take a look at GU. Now, one frustration about the GU that people have had was we've had all that sell-off in our euro, yen, even your Aussie sold off a bit. But the sell-off GU has been very limited. One reason for this is we had our euro pound once again, or rather EUR-GBP once again dropping. Why is EUR-GBP dropping? Because of the perceived safety of the UK compared to the Eurozone. So you actually have cross-channel fund flows that's propping up the British pound. If the problem in the Eurozone really mounts, then I would expect that what downside we're going to get in GU will continue to be limited because of cross-channel flows. But we are looking at the cable chart already. So let us see what we have here. If we look at this, where do we find ourselves? Okay, I actually wasn't using that Fib channel. I just had a class on Fibonacci the other day, and we drew this Fib channel. But I'm not really using it right now for my own purposes, for trading purposes. Although it does look like it's acting as a good support, a good resistance. Anyway, I'm digressing. What do we have in GU? We look at it from a big picture, and we triggered a double top with a break of the 5650 area. Guess what the day's high is? The day's high is around 5651, 5650. So we have pulled back to the breakout point of a double top pattern. What do we normally do when we find ourselves in this kind of situation? We tend to say, hey, pull back to a breakout point. Shouldn't we be looking for a rejection from that pullback? Isn't that considered to be an entry point when you're trading patterns? And my answer would be yes. It's considered to be a potential entry point. So, does it make sense to take action now? Does it make sense to just take the sell side of our GU? Let's see what's going on. From the bigger picture, from the daily charts, we have a mixed set of signals. Your MACDs are still dropping, but you have come off oversold territory in your stochastics. This is fine. As long as I remain below 5650, as long as that resistance at 5650 holds, then I will tell myself, look for that stochastic to push back to oversold territory to start the actual bear market from our breakout. Alright? Can we actually do that? Can we look for such a thing to develop here? Turn to your 4-hour picture. In 4-hour charts, you have a bullish MACD, you have a bear cross in stochastics. So this bear cross in 4-hour stochastics is telling me that my 5650 price point, that is likely to hold. Okay. There's no sense of urgency given that my MACD is pushing up. This at this point, that combination in our charts will tell you look for a congestion, look for some range play. So there's no hurry for me to just say, yeah, I'm gonna sell this now. There's no hurry for jumping. We can just wait until we get nicer signals from a better price point just below that 5650 area. What do I have from the hourly time frame? In hourly charts, we've got a bearish divergence. Although again, MACDs are still pushing up. So I'm interested in taking the short side. I'm interested in using that 5650 area. But right now, I'm not decided on actually pulling the trigger on this just yet. Your intraday signals are still giving me a mixed view, bearish stochastics and bullish MACDs. So I guess I'll have to look for a confluence of bears to once again develop from the 15-minute picture, maybe the 5-minute levels. And once I have that better pricing, see if I could get a sell from just below that 5650 price point. So guys, we have good resistances. We want to see if we can get a rejection from there. I can even use a stop above the 5693 price point. But there's nothing in the chart that's telling me pull the trigger immediately, otherwise you'll get left behind. The charts are telling us this market is likely to congest further. Let us just wait until we see better pricing so that we can reduce the risk that we take. We can reduce the number of pips from where we enter to the stop loss point in case we're wrong. So for now, no new trades, but keep a close eye at 5650. You see new sell signals developing. A confluence of bears on the 5-minute indicators, 15-minute charts, while just below 5650, that's your cue. That's telling you, hey, why don't you look at the sell side of the market? Immediate target would be your 5570, 5553 price point, maybe even 5530, and over time, a push to the current supports, a sell-off towards your 5300 price point. So despite how the big picture, the daily chart looks in GU right now, we know that we are well resisted. We would like to use those strong resistances, look for some rejections later on. Again, stops ideally must be placed above the 5693 price point. The worst thing that you can do when you're trading is trade without a stop. Believe me, I've done that several times, and the problem with trading without a stop loss placed is at sometimes when your losses are already mounting, you freeze up, and when you freeze up, that spells trouble. Okay, so let me get back to overview. Any particular chart that we're interested in right now, folks? Let's take a look at Aussie. Oh, hi, John. Okay, let me take a look at gold first. Well, because of the risk aversion that we've been getting, we have seen precious metals effectively bouncing, effectively rallying over the last 3 days. If we look at gold ourselves, what are we seeing? Anyone who's bearish in gold better start praying. Otherwise, you're you're likely to lose your head and shoulder pattern in the daily charts. If you look at the charts themselves, we have pushed through the resistances around the 1386 area. That push through that resistance level tells us this market or this gold price is looking to retest that 1423 price point. Now let me just put in some indicators. Looks like we're actually just getting started in a new up leg. Your daily stochastics are entering overbought territory. Your daily MACDs generating a new bullish cross. So immediate objective for us would be to take out a minor resistance at your 1410 level. Just how high can this go? Well, since we are talking about uncharted territory, I guess I can use fib expansions to come up with a price target on the top side. Here's our upswing. Here's a sharp pullback for that upswing. Immediate target on the break of 1423 is merely 1435. But I think you should be thinking about getting towards your 1500 level. 161.8 fib expansion of the current weekly market that we have. So we will continue looking for a bullish market. We will look for a test of the 1423 highs, swing highs. We will look for a break of that, rally past the 1435 resistances, and maybe even see 1500 itself. So John, looks like we're bullish big picture. If you're thinking intraday, well, you're still overbought in your 4-hour level. You have a bullish MACD. You've eliminated the inconvenient high wave doji from the previous 4-hour candle. You look at the hourly time frame, and well, you still don't have a confluence of buys, but you're establishing yourself above the 1395 price point. So again, plenty of arguments for the long side. If you're thinking about buying, as long as you wouldn't balk at putting a stop below 1388, everything looks good. I haven't noticed it. Are they? Let me see that. Well, let's put it this way. Australia, after all, is a big supplier of gold. So I would think that it would be natural for the Aussie and gold to have a high degree of correlation. But let's see your correlation. Oh, they do look the same, or they did look the same for a while until interest rate issues in China started dragging your Aussie lower. I think the correlation between the two would not be so strong over the next few days. Gold is up because of risk aversion. Gold is up because of fears of contagion, while Aussie is down because of this contagion fears, because of this risk aversion. Okay, it's not an interest rate issue. Besides, we actually have some very interesting patterns in Aussie. Well, Rob, I wouldn't quite put it that way, but yeah, gold right now is really moving based on the problems that's going on across the world. Something interesting, guys, is your Aussie chart. We did look at the correlation between the two, and we said that for now the correlation would likely weaken over the next few days. Something to watch out for is you actually triggered a head and shoulder pattern in your Aussie from the big picture. In theory, the target for your head and shoulder pattern is all the way down to 92.55. Can we really get there? I don't know about 92.55, but if we are to get there, one of the things that we need to see is a close below the 95.72 price point on a daily basis. Are we close to getting that? Unfortunately, for now, what we have is a mixed view from the daily indicators, suggesting that we've lost bearish momentum. In fact, yesterday's high wave spinning top confirms that lost bearish momentum. So mixed view from the dailies. 4-hour picture, you have a confluence of buys, although you're having trouble staying above 21 EMA. Hourly level, another mixed set of signals. Okay, I would have wanted a nice, neat chart in Aussie. I would have wanted to see 9704 or maybe 9780 itself, the neckline of my daily head and shoulder, and start saying, why don't we short from there? But instead of getting that, we now have mixed signals in the hourly indicators, still a bullish bias from the 4-hour indicators, but unable to push prices past the 21 EMA. So what am I proposing? Mixed signals, resistances, or we find ourselves around resistances. What's the possibility of actually getting a rejection from 9643? Looking for a test of your 95.74 price point. Maybe even finally getting a close below 95.74. That's really one of the things that we need to see. If we find ourselves with a close below 95.74 on a 4-hour perspective, that opens the day for a more sustained downside. And right now, let's put it this way. You have a confluence of bears in your 15-minute indicators. You have a confluence of bears in the 5-minute picture. This looks good enough as a resistance for me to look for a test of your 95.74 price point. Stop losses to be placed tightly above the hourly highs, which incidentally is also the day's highs. So, we actually have arguments for testing 95.74 in Aussie, and hopefully we get to close below it on a daily basis and continue our big picture head and shoulder sell-off. All right, guys, let me get back to overview. So any questions at this point? Again, despite the rally that we have gotten over the last few hours, we tend to think that this upside is limited going forward until we get a clear picture on just how much the French and the Germans are willing to shoulder with respect to the deficits of the other EU countries. We are going to expect that there will be continued pressure, there will be continued contagion, and with pressure, with contagion, we're going to see our euro weaken and weaken. Questions, guys? Anything else? Any charts that you are interested in? Alrighty, folks. If there are no questions, then thanks for joining, and good luck. By the way, this is NFP week. Hopefully those NFPs will turn out firmly and give us another up leg for the greenback. Thanks for joining, folks. And by the way, the Forex Academy trading room is for free over the holiday. So if you want to join me, you want to discuss the markets more, feel free to sign up. Just visit fxinstructor.com.